Good day, all. Ira Epstein with your metals market wrap-up, and this is for Monday, the 24th of February, 2020, getting on to 4:15 in the afternoon. First announcement, there will be no videos from me tomorrow. Now, I'm going to try to get up early in the morning, as I always do, and put out my subscriber video on my paid morning subscribers. Beyond that, there'll be nothing that's on YouTube tomorrow. It'll come out on Wednesday afternoon. Getting an eye surgery finally done. I've needed it for a long time. So tomorrow's the day, and then it's a nothing. You're in and out of the doctor's office. You got to take off one day, and we'll take care of it from there. But I've been waiting for that. As you know, I'm always going, can I read that? This is not where the gold's last trades of the day were. Remember, settlement prices in the metals come in at 12:30 p.m. Central Time, but the market trades to 4 p.m. Central Time. So you always look at where the last trades are, and gold was probably $10 lower than this. It actually had broken one time after the settlement I was looking at, and I'm talking to 12:30, it got only $5 higher on the day. So what's going on? You see the down day in the stock market. The one thing I told you on Friday, and I generally say this, in today's environment, the big event is coronavirus. And with that virus called COVID-19, you just don't know. I personally thought the news out of China was good, but the news out of Europe was terrible. You saw that 10 towns around Milan are quarantined. You saw a train turn back coming from the Italian Alps into Austria. You're hearing more cases breaking out in South Korea. The good news is in Japan, as many cases they're primarily limited to the cruise ships that are just off the coast there that they're dealing with. But are we going to get what's called a pandemic? I think it's meeting the criteria already. I was listening to different doctors on TV describing it on financial TV. Seems to me that we're about there, but they don't want to pull the plug. Can central bankers bail you out of this right now? No, you save that ammunition till the event is come and gone. If you do it right now, you can't beat the lack of demand on markets or fear in the market. So the gold market's getting a bid off of that. The dollar index did pretty good, actually. It was down most of the day. It managed to come back, and most of the currencies fell back, but they were higher a good part of the day. So as we take a look at the gold market, you're up for the week, first day of the week, $27, a new high close, if you will, for a couple of years here at $1672.40. You can see how the market has climbed. Okay, it's a rather vertical type of climb. You can see how the swing line is doing here. Now, you're over the 18-day average, which is over the 100, 200's way under the market. You have 5 days in a row. Let's count. 1, 2, 3, 4, 5 days in a row over the upper Bollinger Band out of this sideways action. I won't be here, but if I were a betting man, I'm going to bet this market tries tomorrow its darndest to get under the Bollinger Band. That's all. Doesn't mean I'm going to even remotely be right. But that's what I think the market's going to try to do. Why? Count. Go back on your charts. Count on the lead contract in futures how many days consecutively you close under or over in upper Bollinger Band. It's hard to get beyond 5. Can it happen? Absolutely. Can some announcement tonight that the disease got substantially worse kick it up? Of course. Is there a reason to be short? No, that's not what I'm saying. I am not looking to pick a top, but I am looking that the market's, I think, ahead of itself and due to pull back now under that number. Fridays were generally weak days. It wasn't. We didn't know what to expect last night. And last night the market opened about $5 higher. It didn't just jump and run. And then late in the day it tried to get back to close to that. We'll see what goes on tomorrow. It's interesting to me where you're at. Is the market embedded? No. Embedded means that you take the slow stochastic and you convert it from being overbought, and any readings over 70 and either number's overbought. When they get over 80, I need at least 3 days in a row of being over 80 to be embedded. You have 2 in a row. No magic to it. I just think that the market most times doesn't do that. In fact, I don't think it. I know it doesn't. Why? I go back and count. It's that simple. Use the chart. When we take a look at the gold-silver ratio, all you did is you got down and now you pulled back into that number. Silver is not gaining on gold at this point. It's sort of flat against it. When you look at the silver market, unlike the gold, yes, you have a day over it today. You were over it right here. That's 2 days. Over here, you were not over it. So you only have 2 days up and over the Bollinger Band in an overbought market. Wouldn't surprise me if it tries to move to the right-hand side now. In the copper market, battlegrounds, the 18-day average of closes. Going home on the settlement, you have a close that is over the 18-day average. In fact, you haven't been able to close back under it during this recent rally for about 5 days. You've got the swing line down, and you're overbought. This market is obviously looking to see what's the next event. We know that the event in Europe with what's happened with the COVID-19 occurred, but is China starting to use more material? That's going to be part of the question. In the platinum market, battleground, 18-day average of closes. Here was your vertical rise through last week. First challenge of the Bollinger Band ended up with, again, the market stalling at it, pulling back to the 18-day average, and it's been fighting against that now for quite a while. Today it's under it, but you still have the swing line up. You got higher lows, higher highs, bias down, momentum down. Chart's not in sync with it. What happened today, and we were talking about it, you had 1, 2, 3 days, over the upper Bollinger Band. On Friday, the close was 26.05. You were still over it 4 days over the Bollinger Band, and today you pulled back under it. 4 to 5 is the number that I look at. It doesn't have to get up that high. You know, often you hit the bands and you back away. But over time, it's something that I've noticed. Now, I'm also concerned, what's the demand for the palladium in an industry where maybe the car manufacturers don't need it if they can't get the factories up and going? What's going to happen in Europe if they can't manufacture certain automobiles? I mean, there could be all kinds of restraints on the supply chain right now. So you're getting your up and downs, but this market keeps proving itself by making new all-time highs. I've heard a lot of talk it's a bubble. I don't know. In the dollar index, you still have the pattern of higher lows, higher highs. Now, I'm watching momentum here, and the momentum lost its embedded reading. Often, losing that reading is a sign that internally really is the word, this market's weakening, and that's what I think is going on right now. If it stays lost tomorrow and can't come back like that, I'm going to look for price in the 18-day average to make a run at each other this week. So you put it together, you're trying to come up with a plan. First of all, going home over the weekend, you knew that it could go either way with the COVID-19. The gamble was which way was it going to go, because each weekend that seems to be the event that we've been in for a month and a half now, and this one was no different. The timing, of course, hearing what went on in Italy, I think scared a lot of people. By the way, Italy's got its hands full. But as you look at intraday tools, and that's what a lot of traders are going to do tomorrow. I don't think today anybody was using much of anything. I think today personally was a day where it was hands off. You're going, whoa, look at this thing. Tomorrow, to get another day like today, it can happen. I have my doubts about it. A big down in the stock market might lead to some people looking for Tuesday reversals, some of the other markets, but that's not a trend change. So numbers that some people use to try to come in against the trend or on the rallies with it, in other words, rallies where they still want to be overall short, well, a lot of people use this particular tool, which is called a pivot point. And what a pivot point does is it looks for a center point by the day's previous high, low, close, and so on. It'll find that point, and then there's a way that you subtract from the market the range of the day and the low of the day, and you're coming up with resistance points above, support points below. We teach you the formula. It's not a secret formula. It's been around for a long time. And then what I do is in my 3-part video, I also give you the opportunity to tie stochastics to it. Now, you could use other tools, but I like an oscillator with it to filter the index. How do you get this? It's simple. Just simply go to our website under free offers. You're going to see it there. Take advantage of this or the other ones. You can always call my staff, or you can click up here. Remember, I won't be here tomorrow. I intend on being back on Wednesday. The only thing that would hold me back that I know of is, excuse me, they're saying Chicago's going to get 6 to 12 inches of snow. If that happens, 12 inches, the city probably gets shut down. I'm Ira. You have a good day.